It's Sunday the 23rd of September 2018. Haven't done a video for about 4 or 5 weeks. I think in the last video I was talking about whether there was a possibility of a small bounce toward this 1230 sort of level, back testing that trend line we'd broken down from back in July. Really, it had a bit of a rally. I think that video I put out was probably 19th, 20th of August, so it's really come back and sort of oscillating around this 1200 level, and I've had this this purple dashed line on the chart for probably 18 months now as a key point for me, and sort of the psychology of the gold market, and I think it's really just clinging on at the moment, and I just think we're getting to a point now where it's make or break time, and it could be this week with the Fed meeting, I think on Wednesday or Thursday, where they'll likely raise rates again in the US. I think not likely, almost certain. I guess probably the more important thing is whether they're going to raise rates again. But I just feel like gold's really hanging in here and needs to rally a bit more. Otherwise, it's likely to break down further. So that's sort of a key point in the markets I think we're getting to, and the same sort of applying across a few of the markets I follow. The dollar index, sort of strangely has been weak, as well as the gold price being that sort of struggling. So I expected the dollar index if the dollar index was weakening, that some of that would start going into gold, but it really hasn't been. So you're seeing these kind of strange effects, and then at the same time, I think that weaker dollar index is also the stock market's doing very well, broken out above the all-time high that had in late January, early February. I'd been expecting it to fail here, broken out. I still, long term, I don't think this is going to. I don't think it's got a lot left in it. It's really running on fumes at the moment. But there is that momentum trade that everyone's in. This high volume is just options expiry, I think, on the last Friday. So it's the third Friday of every quarter, end month. So while the money's still flowing in there, I think that's driving everything higher. Every other market in the world is struggling except the US market. So there's that, crocodile sort of jaw opening up there, where the US market's going higher and every other market's going lower. And I don't think that can continue forever. And the other thing to watch at the moment is the US 10-year Treasury yield, really up against sort of a key resistance level here around this sort of 305, 310 level. If it can break out above there, could see higher prices, and it certainly looks like on this chart like that it's ready to break out higher and head toward maybe 3.5%. And if that happens, it's hard to see how the US stock market keeps at these levels. There's a few arguments around bonds that it's the money flowing into the stock market means bond yields have to compete for. Everyone wants to take that higher risk, so they're selling bonds to buy stocks. But also bond yields set stock prices, stock valuations, and as we see higher and higher valuations in the stock market, that's you wonder how much it can go. So I'm not sure what the catalyst is to turn this around, but we had a similar thing happening in the end of January, and it was really that the bond yield starting to rise was sort of the thing that was highlighted as what crashed the market, and that's when we saw this effect here in early February was when the market started to turn over in stocks, just as bond yields started to get a bit higher toward that 3% mark. So it's hard to know how that's going to play out, but I just feel like we're reaching sort of a pivotal point, particularly for the gold market. Some of the gold stock indexes have been fairly weak as well, haven't rallied significantly off the lows. Setting up, this is the GDX, maybe setting up for sort of a head and shoulders type bottom here potentially, but there's not a huge rally there showing, and just very stagnant sort of price action, and and the same in the GDXJ, I think is, usually these two look fairly similar. And again, not showing a little bit of high volume sort of coming into the market there, maybe some accumulation, but I think these indices are still seeing inflows, so there's someone's thinking that they're good value, but it's not flowing through into higher prices. Um, some of the other things, the gold price actually I might look at the Australian dollar first. Has rallied reasonably well in the last couple of weeks, from the lows around sort of just below 71 and back up towards 73. I think that's sort of driven largely by some of the Chinese news has been a little bit more positive. I think there's some talk of a bit more stimulus, and as tends to happen, and some of the metal prices have been rising, and that's seen to a little bit of a rally in commodities. So, and that's flowing through into the Australian dollar, and I mainly follow this from a gold market perspective. The gold price in Australian dollars has sort of started to fall a little bit in the last week as that Australian dollar has strengthened, and the gold price in US dollars has been fairly stagnant, sort of oscillating around my this lot of 1650 levels being the level I've been following for a few years now, and we're just oscillating around that again. A lot of good margins still being made by the Australian gold miners here around this 1650. $400, $500, $600 margins for a lot of the bigger producers. So they're still doing pretty well at these gold prices. And I tend to think that Australian dollar is, in a long-term downtrend, and you will see these sharp rallies every so often. But I think they're good opportunities to, if the Australian gold miners start falling at the same time, when you have those sharp rallies in the Australian dollar, are probably good buying opportunities. But the Australian gold miners have rallied quite strongly in the last couple of days of last week. I know on Thursday they're all up sort of, in that 5, 6, 7% range, some of the bigger producers. So that's a little bit strange given but often those share prices don't follow the Australian gold price. So yeah, that's not a lot to say at the moment. It's kind of just a bit of a sideways market. But as I said, I think we're really reaching a bit of a crunch time here for the gold price. You can see it's sort of just getting into a tighter and tighter range, and usually these Fed events are the thing that breaks these ranges. Whatever it is, whether it's comments coming in, but turning points in markets almost like for the last maybe 2 or 3 years have frequently coincided with Fed rate hike announcements. So with this sort of 4, 5, 6 week sort of range here, and it's ever tightening, I think we're likely to see a move soon. And I'm not sure it's going to be up as much as I'd like to say it, but it looks like it's, the path of least resistance is still down, and that rally off the bottom has really been fairly weak. Only sort of that $30 or $40 after a $200 down move almost. So I'm struggling to see it being a breakout upward here, and everyone's still bullish on US economy. You're not seeing still much talk about the US debt, even though I think that's at getting extremely high levels. I think getting back toward $1 trillion, the deficit this year or next year. So that's, unless those fears start to come into the market, we start to see maybe some inflation fears as well. It's hard to see this rally. So I'm sort of cautious on some of the gold mining stocks at the moment. I know they did have that rally last week, but I haven't been sort of buying them, heavily. Those Australian stocks, Australian gold miners, I think there might still be better value ahead, and I'll do a chart of some of them and just some general thoughts as well after this one.